The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on this third day of March. I can't believe it is already March. That is amazing. Yep, March it is. And in fact, the weather seems to be agreeing here in Boston area. We're getting a beautiful sunny day and snow tonight or something like that. But that's not the issue. The issue is that the Dow made a new recovery all-time high yesterday, but today's down 91 at 18,196. The S&P's down 11 at 2,105. The composite index is down 33 at 49.74. So interesting. Let me show you these charts. The E-mini made a peak E at 2117.75 the other day, and even though this is the fourth session since that high, we have not made a new recovery high. I suspect we're going to, but it's going to be later on this week or next week to get that leg D in the weekly chart. And look at the rectangle formation that the trading range in the 120-minute chart shows between 2100 and 21.5 to 21.17. Just a trading range, beautiful trading range, just kind of stuck. But in the meantime, look at this. You've got, let me just go through this again. You've got the Dow going to an all-time high in leg E in the daily. I didn't even put that in. Leg E in the daily right there. I think it was 18,263. I think that's what it was. Let me just check. 18,288. And leg D continued in the weekly chart. Leg F/B in the monthly chart. But look at this. The SPX.X, the S&P 500, made a peak D at 2119.59 and has not gone above that since they got close yesterday, but nope, giving it back today. Very interesting. Couple of things going on because this is going to most likely turn out to be peak C, and that means that maybe next week we get leg D. Oh, wouldn't that be interesting? Because once we get leg D, and I'll show you something even more interesting, is the IBB, the iShares Nasdaq Biotechnology ETF made a peak C at 341.49. Now, I could have called it an alternate count, F/G, a G top here. I just, with the MACD and stochastic acting so well, I just don't think I can do that. In the meantime, it's a D, a peak D, so a leg D that could be a peak D in the weekly chart, leg G/C in the monthly chart. This is going to be so interesting. Why? Let me explain why. Because the CompX, which is the very broad 2,000 plus NASDAQ Composite Index, went to an all-time high. That's the one that went to the 5,000 level, although 5,132, is it? Well, 5,132 was the March 2000 high. This is F/B in that dash target line right there, going to a potential top this month or next. We've got 1, 2, 3 within. We're within 3 months of the left side, right side price time match concluding. So that in the daily chart has gone already to leg D, possibly peak D today, and leg C in the weekly. Now, this is going to be interesting. Oh, there goes BB. Why? Well, talking right now, but the BBBY stock, look, spikes up and goes to a leg D. I tell you, we're looking at something that says we're getting really, really close to some kind of a pullback in March. However, let's go on with our story, because the composite index went to D, but the NDX has only gone to a peak C. And the QQQ, which has the NDX as its root, has gone to a peak C. I think there's going to be a leg D sometime this week. Maybe it'll be early next week. Maybe it'll be next week. We get the D, and that decoincides. No, that wouldn't work. Yeah, that doesn't matter because the weekly chart of the Qs and the composite are in a place where they could be having a pullback very soon. Now, let's go through this very, very, very steadily. When I'm looking at the gold chart, and I said that there's a chance that in March we could have a pretty decent rally. That rally would involve the gold stocks, maybe the gold price itself, maybe silver. But in the meantime, back at the ranch, what we're really looking at here is that gold's low, most recent low of 1190, a round number low, in the continuous contract, spiked to a leg B, it's still in a leg B, and that, to a peak B, and that peak B went all the way to 1223, round number low, round number high. But this is really what I'm looking at here, because this chart tells the whole story for me. It's a chart of a pattern that I call the inverted Chapman wave falling axe. You know, sometimes the titles, your eyes glaze over, you say, what? But almost always it's an explanatory thing. Now, what it says is the pattern that I look for on the upside could be met on the downside that has lower highs and lower lows when it's the expanding wedge to the upside. Here it's the other way around. You've got this expanding wedge. It has come from a downside H pattern. Let me just grab this line. It's just easier to do. That's the back of the H right there. And now you've got conflicting. Look at that. And now you've got your arch formation in gold right there. And you've got this tremendous support with the Chapman wave inside track support right there between, in the weekly chart, between 1204 and 1189. And all you need to do is to see a break of that support level, a close in the weekly chart at 1178, and all of a sudden, what do you have? You've got something that's very different, because it's going to suggest, and it will suggest quite strongly, that within the context of this support line, instead of acting as a springboard with a bounce that says it could take it to leg D above the 1309 high, it starts to break down and says, uh-oh, this time we're going to be going lower as what? As the dollar, which is acting pretty nicely right now. It's down just 17 cents. But look what happened. In the daily, it went peak 88. Wow, all these parallel highs, 36, 36. AB, this is an F/B in the dollar continuous contract. It's made a new recovery high at E/B in the weekly. And this is where you have to watch closely, because if there is a technical failure here between the MACD and the slow stochastic, you will have a significant reversal, and the reversal would take you down from 95.30 to test the 93s, especially the 93.86 9-period exponential moving average support. That'll be really important. A break under 93 says the dollar has finally taken a little bit of a timeout, and it'd still be in this kind of rectangle formation, but it would not be a very good sign for the dollar, saying it's run out of upside energy. And just EUR USD, and then of course we're going to get to the most important one right now. Yep, just sitting there, EUR USD, euro dollar currency pair, but we're going to go to the TLT. And that TLT was in the process of making an H pattern, but look what I've drawn in. I've drawn in the H that goes to the lowercase m pattern, two arches. And I'm suspecting that the TLT could correspond with gold, but in the meantime, the TLT is saying that it should try to make 127 to 126 very strong support and have a springboard ricochet to the top side. And I'm suspecting that it comes in the next week or so. But I don't know if we can last a week without breaking under 125.90, which is really the key support. So I'm going to be watching the bonds very closely. That includes what happened here? Oh, no. Oh, it got smoothed out. It got the continuous contract. That's right. I've got all the letters in different places. I have to do it all over again. That's the way it is if it's not automated. It made a peak E in the monthly, and this is what we're going to watch real closely. And the dollars, the bonds are trying to rally from a low here. That would imply that money is coming from the safety of bonds into the so-called safety of stocks. We'll see if that happens. I'm not sure. I think in terms of the Dow, 18,100s should be some kind of a support over the next day or two. And then I think we're going to try to rally. I'm not sure yet, but we'll see. And the VIX index, I always have a look at the VIX index because, you know, it's one of the key functions that I've always used intraday as harbingers of turnarounds, etc. Yeah, the VIX is actually showing some kind of strength here. It's up a full 0.91, should be up more, but it's up 6.98%. That's a big percentage at 1395, but it just hasn't been able to cross the 9-period moving average. I'm not sure it's going to be able to do that before we start to see later on that the VIX is starting to really push up into the 17s and 18s, and I think that has to wait for a little later in March. I've done all that stuff. Now what I'm going to do is I wanted to look at a couple of stocks. Let's see, let me turn around here. CLVS, which is Clovis for Travis. Clovis is at 76.08. It is down 297. It made a peak D, and there's a possible peak E in the weekly, and the daily, the monthly is in a very strong move up. BC, which could be an overlapping wave once it gets above 93.34 and start to make D. I like it. I think it's consolidating. I have a feeling that with the IBB being a little bit weak today, that it is telling us there might be one more spike to a nominal new high, but once if I can just tell you, Travis, that if it gets over 79.80, I would either do one of two things. I'd either start taking something off right away, or I would raise my stop on a good part of my position to a pretty tight trading stop, 70 cents or something like that. Why? I think it's getting a little close to some kind of a pullback again, more time than price, but we'll see about which one it is, or it might be both. But in the meantime, it's had a fantastic move. I recommended, I think, back in the low 70s that it was worth just taking another position because it was acting well. And if you've done that, then I think you've got a very nice gain. Now, let's do the next one, which is, let me just scroll if you don't mind. Just swing around here. Got a lot of stuff. Tennis. Sorry, I just, okay. Oh, very good. The XLE. I had a question about the XLE, and believe me, I'm following this really closely because there are a couple of reasons why this whole energy sector, the S&P Select Energy SPY, the ETF, is worth monitoring. And that is because of that massive move down in the monthly and the potential for a lowercase h to go to a lowercase m in the weekly chart. You know what? During the break, I'm going to get my CD out so that for those of you who are new, you'll see what I'm talking about when I talk about my CD book introducing the chart wave methodology. I'll be right back. Dow's down 97.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Just a couple of quick things about Travis had asked about to kind of discuss. Yeah, the CLVS Clovis trading at 75.69 is gapped down. It's now down 336. I want to see that it holds the 74s and it goes sideways, and then there should be one quick pop to the upside. What I'm going to recommend, if you've got a good position in it, I would recommend taking just a little bit off right now in case I'm wrong, and this is really a peak D that is not going to go higher, because it is peak D. But I was anticipating we'd have one more pop up for E, just like the IBB. And the weekly chart, you could turn at any point. So I would prefer to see good profits taken, and better profits will make up that difference if it does go above 80. Okay, and the other thing is, in my CD introduced in the Chapman Wave methodology, this is the pattern I'm talking about. This is on slide 334, the dreaded H pattern. We used to call it dreaded H. I really just call it the H pattern, lowercase h pattern now. It keeps coming down, and the left side gets broken, and it goes lower and lower, and each H starts off the test of the left side low, and each time it breaks, it becomes weaker until at some point it makes a lowercase m pattern. And that m pattern is really what I'm talking about. So, and we're talking about it in the XLE, we're talking about a number of different stocks, number of different commodities. But I'd like to go to our first caller. We've got John in Philly. John in Philly, how are you?
Basil, I have to pay a compliment. I applaud your work on sharing very quickly and succinctly all those elements that you just went through in that first 5 minutes, going from the Dow, the QQQs, the S&P.
Thank you very much.
that S&P formation where you've got your peak D in the daily and leg and potentially peak C forming this week. So my question is this: if it unfolds this way, and if the S&P rallies over 2119 and change next week to move into leg D on your weekly,
without making a new high this week. Yep.
Exactly. Yep. Indeed. If those things occur and set up for the idea that you have that vulnerability could be present thereafter, my question very specifically is, should it unfold that way, share with us, if you would please, the parameters that you'd be using to guesstimate downside targets for the S&P cash.
Very good question. Now, there are a couple of things that I need to talk about. First of all, as I've always said, in my mind's eye, I have a very clear picture, but because I don't always have to articulate, and this goes back to my youth, the picture is clear. The words to articulate the thoughts, because I don't do it all the time, sometimes can sound convoluted. I try not to make them convoluted. I try to represent graphically as clearly as I can what I'm looking at, but let me do it this way so that the words don't get in the way. The picture says that the S&P 500, called the $SPX.X, that's the way I get it in TradeStation, has gone sideways, and you'll recollect that in my S&P futures, I had already drawn in with our caller last week. I drew in the cup formation, which is exactly where we are right now, and I drew in the arch formation to say, even if there's a spike up, I'm looking at the arch as saying that there's some kind of consolidation going on. Now let me go to the weekly chart and say the weekly chart is really clear as I picture it. It's got a leg C, and we have to call it leg C until 4 o'clock on Friday when the weekly bar closes. Now, within the context, and you remember how long it took me to decide that that wasn't a G at 2093.55 back in the week of the 26th of December, that there was a chance that we had made that spectacular October reversal, October the 15th low, and that could have triggered a new buy signal. And because there was a volume, this is something I haven't spoken about for a little while, another technique that I developed, I use unbalanced volume all the time. I use volume per se, just as a volume bar, very rarely. But on the occasions that I do it, I use it as a climactic volume low bar. And now let me explain what that is. And that's right there. The week of the 17th of October, volume was 15,718,000. Now, I'm not sure. Maybe it's even a billion. I don't know. But anyway, it says million. And it doesn't matter. It's the bar that counts. And I'd circled it right there. And what that rule says in the Chapman Wave methodology is if there is a volume climactic spike low bar, you can go for a minimum of 28 bars, but even to 52 bars. But it's a weekly chart. I use it on dailies. So I'll explain that as soon as I get back and explain what I'm looking at.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're back with John and Philly, and we're looking at the S&P, and we're looking at specifically the S&P weekly chart, because it's going to be a harbinger. It's going to give us information and be a harbinger of the potential for what happens for highs and lows in March. And my thinking right here, and one of the reasons why, just for my subscribers on a short-term basis, we brought protection to the downside a couple of days ago, and why we're looking at this as being a rather vulnerable area with just a modest amount of stocks and indices trying to complete their up moves in the dailies. But most importantly, it's the weeklies that have the chance next week, or it could be the following week, but I think coming up next week that we should be seeing some kind of a rally that takes us just slightly over 2,119.59. If this week we do not do that, it should be next week. And what that would do, it would say very quickly we've gone from a peak C to a D. And you can see right here, you went very quickly on the week of the 29th of August at 2005.04, pull back 1 bar, 2 bars. No, it was the week of the 5th of September. 1 bar down, 1 bar up, and you go to D on the 19th of September. No, yep, the week of the 19th of September at 2019.26, and kaplop, you go all the way down to the October, is that the, yep, the October low of 1820.66. So those peak C to Ds that occur quickly have the potential especially if they are within one bar and a very tight high and low parameter, are saying that the extension of that leg is something you've got to monitor really closely. And you then want to see, if you want to be looking at the downside. Now, John, this is the answer to your question. The steepness, the beta, the distance between the green moving average right here, the 9-period differential in the MACD, I call it the fast moving average because it moves quicker, and the red one, which is the slow moving average, and the parameters I look at are 12, 26, 9, and 80% and 20%. If there is a very sharp dive and that green line opens up very quickly and makes a wide beta, and at the same time, the stochastic, which is really strong at 92%, starts to weaken between now and, say, next Wednesday, and then slides under 80% by a week from Friday or even 2 weeks from Friday, then we'd be looking at 2076 as the 9-period exponential moving average. My guess is that that move down is going to be the one that has the potential either to have a big percentage move fairly quickly within weeks, or it's going to take time and price to come down, and it'll be the first time we have a 6 to 8 week consolidation, getting ready for another very powerful move up in the market. But we'll only see whether that's going to occur if there's a rotation within the S&P between different sectors. And my guess is that's where we will get a counter trend rally in the oil stocks, and probably the bank stocks will be part of that particular move. That's what I'm thinking. So now let me say, if I'm wrong, one of two things is going to happen. Either that by Friday at 4 o'clock, the S&P is smartly above 2120. It's more like 2125 to 2127. It extends leg C, and that says, uh-oh, you're wrong, mister, because we could go all the way to that green line and test it, which will be the up channel final resistance of 20, I can't even see it, 20, try to do it again, sorry, 20, keep slipping away, 2147 to 2150. So that's if I'm wrong, then this is a move that has the potential to go even higher in March, and that would raise the base of support. My thinking right now is that we're going to have a move that says we don't make a new high. I don't even know what could be the catalyst right now to go above 2119.59, that we do make a peak C. Sometime next week we make that leg D, and that allows the Dow to continue its weekly INDU, weekly leg D, because it's already made an extension this week. And you look at the New York Stock Exchange, NYA.X, has only got a B, but it has the potential to only go to a C, which will turn out to be an F/C, or is it a G/C? So the New York Stock Exchange is going to be a clue for the monthly. If the New York Stock Exchange goes above 11,108.39, doesn't have to even close, it just has to go above it. It's suggesting very strongly, here again, the monthly charts are pointing to higher prices in 2015. Wow. Did that come across clearly or not?
Thank you very much for fielding the question and giving that explanation. I appreciate it.
Okay, well, thank you very much. It's a great call as always, and thank you for calling. I always appreciate it.
Very good.
So, folks, that's the S&P. Now, why am I focusing on the S&P? Because I wanted all the little ducks. I would have probably gone short already, the Dow, incorrectly short, because I think that we have to have the S&P in that leg D in the Chapman wave. That's what you expect. You can't, you usually don't get your major sell signal from a C. It's usually a D, and that would be just on the weekly chart and would be saying short to intermediate term we could be coming back down. Two things are very important. One is the IWM is in leg D at all-time highs this week. That's very important. It's extending the leg D in the Chapman wave stalk leg formation, leg body. This is the neck that's forming right here. And it's also saying, based on the 93% in the stochastic weekly and the MACD, that when the sell comes, and of course this is only if I'm correct, I mean, yeah, if it comes next week, what if we go, I should have mentioned to John, if we start to head down now very sharply and the S&P takes out 2076 support, it could still be peak C, but my thesis about a new recovery high in March will become suspect. It extends everything out because I'd still have to wait for leg D in the S&P. So I'm watching this closely, and you never can tell. I'm looking, AZO just had a fantastic earnings report. It's trading right now at 656.99. You know what? I wanted to do this morning. I thought about it really carefully, but we have a couple of, how can I put it? Although they're very low price stocks, they are high risk in terms of percentages. And I don't want to mess around with my subscribers. I want to be as cogent and clear and not fuzzy things up by taking losses on things that I don't need to be taking losses on. And I thought I wanted to short AZO, AutoZone Inc., car, truck parts, all-time high, spectacular stock that's just gone from the low triple digits to today's high of 674.84, and I wanted to short the opening. But I said to myself, if I short the opening, yeah, I'm prepared to have a 1% stop, like a six-point stop. But it might be more prudent for me, if I am anticipating that there's one more little pop-up to come this week, possibly for the NASDAQ to make its, the QQQs to make its leg D, that I don't want to be too enthusiastic here. So if I had shorted it, the short would have been perfect because this morning opening was a 671.14. Initially, I thought I would have put in a 4-point stop, but then I thought, wait a minute, that's just the opening price. It could still spike higher, even though it could close much lower. That's what I didn't know, and that's what I thought I should really have said. At the opening, we want to buy a put, a 670 put, because right now it's traveling at 656. Now it's up 6 points. And it only went to 674.84. I would have got stopped out probably if I said a 4-point stop. My thinking is if I actually put the trade in, I would have made it a 6.1%. 1% is no big deal on shorting a stock. And look what happened. It's come down. Now, why am I making a big deal about this? Because the MACD is very strong. It's had huge volume all the way up this whole month and a half. The stochastic still at 86%, although it was actually at 89, I think, earlier. A day or so ago. And now what's happening is that I've got leg C, and that was the other reason. I'm about to sneeze. Hold on. Is this? Oh. There you go. I should be back at this particular point. Okay. I guess it was such a good, I should have just sneezed, huh? Yeah, we're back. First of all, you heard the sneeze, and then I'm back. All right, that's the way it is around here. I did my best. Excuse me. The weekly chart is still in leg C, even though the monthly is probably in leg F. Now, this is saying to me that my thesis about a sharp March sell-off might be correct. We don't know yet. But it's also saying that if you look at Ford, look at Ford's action, down 0.48 at 16.09, made a peak F top in the Chapman wave. I even put the down arrow in, said to my subscribers, we've been wanting this all the way. We had it, in fact, lower down, didn't get back in. Then I said, it's off my list. It's going to leg E and then an F. It's off my list. Why? Because of the Chapman wave methodology. It says, be very careful if the technicals are saying that there's a chance it's a peak F, and that's exactly what it did at 1662. We happen to own GM. GM is holding okay, not great, but it's holding okay at 37.48, and we got in quite a bit lower down. Our first half position, second half is kind of close by, but it's saying to me that maybe we're about to go into a little scare recession-wise, and that's going to show up in March and April. April looks to me like it could be really sharply lower. And if that's the case, I'm looking at this and saying, this is the time to be a little bit careful on the long side, and we are starting to implement shorts if we can get them. And even there, I'm just trying to get them at the right price. You never know, but that's the attempt. Now, here's another thing that I think is quite important. TM, and I had a question the other day from someone, and I said, I just don't. It's one of the few times I've no count whatsoever that I'm comfortable with in TM, which is Toyota Motors, other than the weekly has gone to a D, leg D, could be making a peak D, and the monthly has gone to that right arm extension that pushes higher, but the technicals are way weaker than it was earlier on. And that could be E/B. Let me type it in Toyota Motors. And I'm mystified as to why Ford is acting so poorly. Wherever I go, I see Fords. I love the Fusion. I think it's a snappy-looking car. It ain't cheap. If you get the one with all the stuff on it, you're talking 35, 36 grand. And the size is, it's not a big car. But it seems to be great. But the infotainment system, what? Oh, I'm going to say it again. You guys out there in Autoland, GM, TM, whatever you are, call on me. Ask me to work your infotainment system. If I can work it, everybody can work it. If I can't work it, you don't want to go there. That's the way it should be. It doesn't have to be me. It could be anybody. But you get a dodo, an electronic dodo, to do it. You don't get Dave White. You get someone who doesn't know anything about the electronics and can figure things out, but they don't have the patience. And that's the thing. It's the patience. Nobody wants to. I want a knob. I want to go right, left for volume. What are they thinking to go to a screen? They talk about, Markey, my favorite Massachusetts politician, the back door, no, the front door. The guy who always checks the front door after it's been left open and the place has been burglarized and then legislates everything. Mr. Markey, I'm saying to you, Senator Markey, I'm saying to you, get onto this right away. Cars are now coming out without any spare tire. It is a crime to be out there on the road with a flat tire trying to do something with a spray can or whatever it is that they've got, an air can. You have to have a full spare. The little tiny donuts, they are highly dangerous. You got all this legislation, and then you come up with, you allow the auto companies to get away with this, with talking about saving on fuel. That's really what it's all about. Space and fuel, more fuel than space. Don't let them get away with it. Full spare. You've got to have it in the back, or wherever it is. You've got to have it. And okay, got that out of the way. I'll do it again one of these days. Now, Toyota Motors, yes, the person said, I think it's a short. And then I said, I think you might be right, but I just don't know what the wave count is. Because, look, it went AB, then it goes CD. This is from the low bar of the 15th of December. Then it goes CD. Now, I could have called this a recycle. That's what it is. Mr. Chapman, these are your techniques. How did you miss that? Good grief. Legislate. I'll be back. Basil Chapman, Tiger Editions Hour, and I'll be right back with the correct notation of Toyota Motors.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Chapman, Tiger Technicians Hour. Don't forget my opening call. It's my daily service, my newsletter, very comprehensive newsletter. And now, and thank you so much to all of those of you who are sending me stuff about the match between 1927, 28, and 29. Just a lot of it I've known, but there are things there that I'm surprised at, or I just had forgotten about, or just plain didn't even know. I mean, it's just there was a very interesting letter that I got that was discussing the differential between the poor and the rich that went right through into 1929 and how we are matching that. So that's something that seemed a very obvious thing, but I just never thought of it as a specific category. I wish I could actually chart it with a waveform. Now, let's do a couple of things here. This is Toyota Motors. Now I've got it. It's got a peak D. A very good chance by the end of the day. So if it's at 135.40 down 47 cents, if it closes under 134, probably I'm going to have to, the MACD will go negative and the stochastic will drop further, and I'll put a down arrow. Weekly D. This is telling me that there's a real good chance that we are in the process now of having a little mini recession. I think we're in a little mini recession. Ford is telling me it has to, that there's something going on here. Honda, what's Honda again? I can't remember what Honda's symbol is. Honda Motors, HM? No, it can't be HM. Someone might tell me over there in the den. But in the meantime, Chrysler, Fiat Chrysler, look at this. Peak E. Yesterday was the high, all-time high, because it's a brand new chart. Of course, Chrysler's been around since the 1920s. 1585 was the high. So I'm looking at this and I'm saying, all right, what is the Rolls Royce? I always look at that. Roy Ray, no, I can't get it. Oh man, I'm going to waste time. I want to waste time. I want to find it. So, format, let's go here and we go look up. And I'll say, oh, that's right, Rolls Royce, of course, owned by Ricef and Ricey. Ricef and Ricey. Ricef. Is that the one I use? And Ricey. Ricey. You may not mix. Oh, no, what did I just do? All right, I just messed up something. No, you can, that's fine. Close. Wasting time, yeah. We're just about to wrap up. We got the options hour coming up, and Ricey. I thought that's what I looked at. Look up Rolls Royce. I always do this. I look at the name Royce, owned by BMW and Volkswagen. RYCEF and RYCEY. Okay. Close. RYCEF. Rolls-Royce Holdings PLC, incorrect symbol. RYCEY. All right, something's happened. I'm not getting. Oh, there it is. So we've got it. Yeah, look, I'm a little shocked. Not a little shocked. I'm shocked. Rolls-Royce made its high back in December of 2013 at 106.0300. It went all the way down to 63, let's call it. And now it's only trading at 72. That, to me, is a mystery. I don't know what's going on because they are selling like hotcakes. Yep, hotcakes. Hey, folks, I'll be back. I'll be back later on with Tom Bryan, I believe, today. Let me just double check. Other than that, we've got program all the way through this afternoon. Stay tuned for the Great Options Hour, and I'll see you tomorrow morning. Have a great rest of the day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.